Hello everyone, welcome. This is a scalping strategies webinar. Basically, we're gonna go through what the scalping is and some really simple strategies which you can use if you're interested on scalping. So as usual, please let me know regarding any issue that you might face. I'm here to help as much as I can. And until I have any feedback from you regarding the audio, the visual, the sound, etc., I will go through the disclaimer warning. I will try to remind you that this webinar has been recorded. So if you cannot stay until the very end of this webinar, you will anyway receive the recording via email. So this matter is provided as a general marketing communication for information purposes only and does not constitute an independent investment research. Nothing in this communication contains or should be considered as containing investment advice or an investment recommendation or a solicitation for the purpose of buying or selling of any financial instrument. All information is provided from reputable sources, and any information containing an indication of past performance is not a guarantee or reliable indicator of future performance. Users are acknowledged that any investment in leveraged products is characterized by a certain degree of uncertainty and that any investment of this nature involves a high level of risk for which the users are solely responsible and liable. We assume no liability for any loss arising from any investment made based on the information provided in this communication. This communication must not be reproduced or further distributed without our prior written permission. Trading leveraged products such as forex and derivatives may not be suitable for all investors as they carry a high degree of risk to your capital. Please ensure that you fully understand the risks involved, take into account your investment objectives and level of experience before trading, and if necessary, seek independent advice. So we are good to go. Let me check. Screen is crystal clear. No feedback though from any one of you. We have a question box. Don't forget to ask anything you want, any query that you might want in our question box. This is the email address. Let me just, email address webinars@edgefm.com. Feel free to ask anything you want. We're going to try to help you as much as we can with any obstacle that you might find in your trading. I'm afraid, Brian, we have stopped providing handouts. Okay, it's just the recording. Okay, it's prohibited. The handouts are now are prohibited, unfortunately. So, covered in today's webinar, we're going to go through, as I said, the theory of scalping, what actually is scalping, because a word that you hear several times, scalping, scalper, scalping strategy, but what actually is. Things to be considered before you even adopt a scalping strategy, how to scalp as a beginner, and some of the top indicators, simple indicators for scalping strategy. Obviously, there are a lot of scalping strategies out there. That's solely for beginners, let's say. I mean, people that are just want to try for the very first time scalping. So it's very, very simple and straightforward ones. So what is actually scalping? So my dear fellows, oh, why you? Okay. Sorry, it seems that my screen has frozen a bit. Okay, now it looks okay, perfect. So, what is scalping? Scalping, oh, sorry guys, just a second because I'm facing some problems with the screen. Give me just a second because it's not responding. Come on. Okay, it's back finally. Okay, so what is scalping? Scalping is a strategy, a trading strategy. Why? What it represents? Basically, any single strategy which aims to profit from small price changes, with profits on these trades taken very, very quick. And as soon as the trade has become profitable, these are called scalping strategies. Okay, it's every single trading strategy that it has been designed for profits from small price changes, very quick, and as soon as the trade turns profitable. So as soon as the trade turns profitable, the position closes. All forms of trading, okay, just to clarify that point, that it's not something easy, right? Like any form of trading in general, all forms of trading requires some significant characteristics, such as discipline. But exactly because the number of trades is large and the gain from each individual trade is small, a scalper, so the person that actually uses scalping strategies, must have a rigid adherence to their trading system. So like an extra discipline, let's say. Yes, scalpers for trying scalping or being a scalper, you're required to prove and to show a rigid adherence to your trading system, high level discipline, right? Because it's the only way to avoid one large loss that could wipe out dozens of your successful trades. So even though discipline is the number one in regarding to trading, in regarding investing, trading, etc., scalping requires an extra effort. Okay, so exactly because even though we are referring to small profits, but it's the amount of them, because the scalping is all about many trades being open and taken at a very quick pace, okay, but multiple ones. Scalpers can take as many small profits they want, okay. However, a scalper will take many small profits, right, and not run any winners in order to seize gains as and when they appear. So the aim for this particular trading strategy is that through, let's say, a really large number of winners, of small winners, to end your day with profit. So the aim is to have a large number of small wins rather than a few successful trades with large win size. It's the idea, the concept behind it, okay, behind scalping, the idea behind scalping is that lower exposure. So it's the concept of a lower exposure risk. So scalping relies on the idea of lower scalping risk because the actual time in the market on each trade is quite small, lessening with this way the risk of an adverse, let's say, event which could cause a massive move. Also, on top of that, scalper, what the scalper do is basically taking the view that small moves are easier than to get a really large one and end up successful. Okay, so you know there are a lot of moves in the market. Okay, but the small moves, the small price changes are more frequent than large ones. That's the idea behind it, that by taking multiple small let's say moves, by trading based on small moves, that is easier, okay, than trying to find a large one, and it provides a lower exposure risk. So needless to say that this is applied everywhere, not only in the forex trading, but every single volatile, let's say, asset. So scalping, if we have to focus and explicitly and then more precisely explain forex, the scalping in forex trading. So basically, scalping in forex is how can I simply put that on? Is a style that involves opening and closing multiple positions on one or more forex pairs over the day, over the hour, over the course of the day. So, and think guys, remember that scalping might take seconds or even minutes. Okay, every single trade might take seconds or even minutes. That's why I said multiple trades, quick ones, and as soon as the trade turns positive, you close it. That's the concept. So so let's move on. Anything else that I need to put on in this? Let's move on. Okay, perfect. So that's basically a repetition of what we have already mentioned. Small and frequent entries, few pips, really small moves, smaller time frames as low as seconds up to 5 minutes. This is the scalping. Low exposure risk, but it can also magnify losses if the market does not move in a favorable direction to the bet. Right, obviously. So so yeah, this is the majority, I will say, yeah, the 99% of the the scalping trading strategies, they are executed within just a few seconds, not even up to 5 minutes. But there are, okay, the majority is up to a few seconds, maximum a minute. So the ideal, let's say, time for scalpers are typically a minute, maximum a minute. Okay. Obviously, there are strategies that are really they have a high level of accuracy in a 5-minute chart. I'm not saying that the 5-minute chart, there is something wrong with 5-minute charts, but it's but usually and the majority is executes its trades within just few seconds. What's the good about it? Basically, a scalping trading strategy, as I said, it's widely used, right? If we had to pick one market in which is more popular, it would be the currency market. Okay, the currency market. However, just because it's more liquid and volatile than other markets, but it is also popular in cryptos, stocks as well, even gold, but yes, mainly in the currency market. And there are two possible implementations. Scalping is possible using a manual way, a manual strategy, so doing it manually, or automated one. So basically, manual scalping requires you as trader to keep monitor the charts constantly, where an automated method utilize a robot, an expert advisor, and etc. Okay, so what else? Type requires, yeah, have in mind that if you'd like to give a shot, let's say on the scalping, make sure that you have a high speed, reliable internet connection, and obviously a very dedicated and reliable VPS service. It will be a shame because of your low internet connection to miss either an entry or delay an exit and etc. Okay, it's very, very important. It requires a high speed, reliable internet connection and a dedicated VPS service. Before we move on how to identify, sorry for that, to identify actually things to consider before taking a scalping, applying a scalping strategy, just to highlight at this point how important is the risk management in this kind of strategy. And I will explain right now why. Remember that in trading, you can trade either when the price is rising, the value of the asset is rising, or even when it falls, right? So you can either take a buying position, a long position, or even considering selling. So open a short position if you're thinking that the price, if you believe that the price will fall. But because we're referring to leverage products, to CFDs, to derivatives, remember that any position you are taking with a particular deposit, which is, I remind you that is called margin, because I don't know how many newbies we have over here. Remember that because it's a leverage product, so you have leverage in order to increase your exposure in the market. Even though leverage products can amplify profits, but they can also very easily magnify losses as well. Okay, because your profit or loss are calculated from the full value of the position. That's why it's vital to have an appropriate risk management strategy in place, no matter which scalping technique you are using. This is where the discipline comes. So it's not only applying and finding a nice scalping strategy for you, it's also embedding in this strategy an appropriate risk management in advance. So rules, how much to risk, when to consider exiting, when to consider entering, risk and reward ratio, and etc. And stick with it. Now, things to oops, sorry. Okay, here we are, back to where we had been. Okay, things to consider before you take any, before you start even scalping Forex. Very, very important. As every single strategy. First of all, the obvious. You need to basically identify in which type of market you are, right? Does the market trending? Is it ranging? Is it moving to the upside? Is it moving to the downside? So the very first thing is to realize what kind of market you are. Okay, that's the very first thing, because by identifying the market, you will act different in a different way. So, for example, if your market is ranging, then the top and the bottom of that range will be your immediate support and resistance levels. So typically you can sell when it breach the support zone, and you can buy when it breach your support zone. So you can use these levels as your pivot point tools and immediate support and resistance levels. While when an asset is trending either to the upside or to the downside, you can identify previous dips or throats in the trend in order to get the best price during a trending market. So, click. Let's move on. Okay, I've already partially covered that, but remember that this is the Forex industry. Trading involves derivative products. They have leverage. Also, it's important to understand what the leverage is, what the spread is, what liquidity is, what volatility is before you adopting any Forex scalping strategy. Very, very simply, let's say, remember that the spread is the difference between buying and selling a currency. Okay. So yeah, when scalping, okay, it's better based on the scalping strategy characteristics and the scalping approach characteristic. It's better to, when you scalp, it's always better to go for the lower spread pairs. Okay, rather than a pair that it has a massive spread. So for example, over here in this screenshot, the pound yen has the wider spread. So it's something that you shouldn't consider for scalping. You should go for dollar yen, euro pound, just nearly zero. So it's always better to go for the lower spread pairs because scalping, remember, requires a high trade volume, low pip margin strategy where spread can really hit your long-term dollar returns. So let's move on. We explain what kind of assets assets you should choose in spread terms. Now in liquidity terms, remember to pick currency pairs and assets that they have a high liquidity. They present high liquidity. So high liquidity assets, not only currencies, I know that I've put only currencies, but in general, high liquidity assets tend to follow the loss of ranging and trending market better than non-liquid or low liquid assets. Okay, so this is the very next thing that you need to have in mind. Um, and simply because if you choose a pair, let's say, that it has, which has low liquidity, okay, the major moves, any um, basically, okay, let's compare. Let's go straight to comparison. Okay, let's assume that you have the euro dollar, okay, euro dollar, and you have the pound yen. So euro dollar is a high liquid asset, while pound yen is not. It's not as high as, let's say, euro dollar. Because euro dollar is a high liquid asset, it will present a trend, it might present a range, but pound yen, which has low liquidity, um, um, it will not present a clear range or a clear trend. So in low liquid assets, we might see a major move, okay, and at the same time the volumes to get very, very quick, very, very high. So it gives snap, let's say, moves. I'm trying to find a way to present it in a more simpler way, but hopefully this was enough. So try to pick assets with high liquidity but low spread. Okay, high liquidity, low spread. Let's move on. Come on. Oops. I think I skipped by mistake. Yes, I did skip by mistake a slide. Okay, just something, an addition, a reminder basically regarding liquidity. Forex, as the majority of you already know, is the most liquid, as I said earlier, market in the world. Just in 2000, was it 2022, 23, I don't remember, we have seen $7.5 trillion being placed in the Forex industry, in Forex transactions every day, by the way. 7.5 every day were traded. The average, I think, was 2022. 7.5 trillions placed in forex transactions every day. That is why the scalping works quite better compared with the other markets. It works better in forex because it's a very high liquid market. It's the most high liquid market in the world, basically. So that's why having a high liquidity asset gives you the ability to buy and sell quickly without affecting a market's price. That's why it's ideal, or is the preferable, let's say, market for scalping. Okay, that's why it's a good market for scalping. It's a good market for scalpers. It's a preferable one for scalpers because it gives you um, the chance to enter an exit position very quick. However, don't take for granted that the liquidity of every single currency is fixed. No, the liquidity of every single currency is not fixed. It will change based on the fundamentals, the number of factors, based on events of the day, the time of the day. There are, let's say, euro dollar is very, very volatile and very liquid in the US Open. So the time of the day matters. The economic conditions that we are facing that particular day. So it depends from many factors. So what else I wanted to, okay, let's now move on. We said low spread, high liquidity. Let's touch a bit the volatility section. In other markets, let's go to the next slide. Come on, Andrea. Why is doing that? Okay. In other markets, liquidity, sometimes it means stability. But for Forex, this is not the mean. For Forex, it means highly volatile. So high liquidity means high volatility. This means that major short-term price movements can happen at any time. And this is what a scalper wants. He wants a major short-term price movement in order to cause the value of that particular currency to either spike or move down in seconds. So the volatility presents opportunity for created profits, and that's another reason why scalpers often favor Forex. Okay, but conversely, this can also lead to an increase or in the exposure of to the risk. Okay, so be very careful. It is a volatility. It is something that is favorable when trading, but remember that even though it allows you to profit from rising and falling markets, it's very important to it also allows you to lose significantly if you haven't applied a risk management strategy. It's important to have a risk management strategy to minimize your losses. So let's move on. So these are things that you must check before applying or taking an entry based on scalping. So these are some of the benefits and disadvantages, disadvantages of scalping. I don't want to waste your time because I can see that it's already 36 minutes past the hour. So feel free to check the benefits because the most of them we have already mentioned the majority of them. Okay, so I'm gonna skip this this slide and I will try to move on to the next one. So other than the pros and cons, let's see together what what you need to do. Basically, again, before applying a scalping strategy. It's very important. This is a very important slide, so bear with me. So in scalping, you need to calibrate the time frame of your currency charts. Okay, how? Basically, that depends on the number of scalp trades you wish to make per day. So, and this is a very important part of risk management. So you need to predetermine, so to determine in advance how much, sorry, excuse me, how much time you have free in order to spend it in front of your charts. Okay, how much trades you can actually open per day, and obviously how much money you can risk on those particular trades. Recommendation in general for scalpers is not to have more than 5 trades a day. Obviously that depends on the market conditions, but ideally 1 to 5 trades per day is the appropriate number of trades, of scalping trades. In this case, you can go to a higher time frame, okay, such as the 30-minute chart, 1-hour chart, and 4-hour chart, okay, to do some multi-time frame analysis first, just to have this, to check, to have a first look, let's say, at the bigger picture of the particular asset, in order to confirm whether it's ranging or trending, and etc. So it's like you have a very first look, a wider look of what's going on in that particular asset, with that particular asset. Secondly, you need to map out your key support and resistance levels, okay, accordingly. When if it's ranging, then remember the top and the bottom. If it's trending, then you can use trend lines, channels, and etc. Remember that it makes no absolute sense, okay, to use a 4-hour or an 8-hour or even a 12-hour or a daily chart when you're doing scalping, and which requires a trading in ultra short terms, trading. Okay, remember that you are looking to make just 5 pips on a scalp in for a few seconds or even up to 5 minutes. So it doesn't make sense to view or even analyze any chart above 4 hours. So you will only need to check 30 minutes up to an hour, just to get that first sense, that first look at the biggest picture, just to to understand whether it's ranging or trending. Okay, so now in order to ensure the optimum entry on your scalp, the optimum entry of your scalp, you can zoom in. What I mean by zoom in, basically to go to the lower time frame, such as the 5-minute chart, as long as you have already monitored the 30-minute chart and 1-hour chart to check the overall outlook, right? So you go lower to the 5-minute chart and you start timing your entry properly. You might use moving averages, you might use whatever you want, but let's assume that you're using my moving averages. Okay, let's assume that you're using moving averages. If you're using moving averages, make sure that price is above the 200 period moving average for that particular time frame, and resting near a support level. Okay, if, of course, if and only if you're going to scalp in a long position, especially when the market is trending. If that's the case, trending market, a long position, 5 minutes chart, 200 period moving average or exponential moving average, depends what satisfies the most your asset. Then you can take your entry, you can start timing your entry, and have in mind that you can place stop at the lower pivot point. So put your pivot points on. So if, for example, if the trade has taken at the second resistance of the day, then you can use the third resistance of the day as your stop loss. And you can take your profit again in another pivot point. If you have placed a stop at lower pivot points, such as the I don't know, third support, and your asset is ranging, then you can trade. You can take your entries at the either at the first support of the second support of the day, or the resistance of the day. So remember that in a range market, any pullback away from the top is calling for sell. Any rebound away from bottom is calling for buying. So let's move on. What makes a good scalper? Okay, emotional control, handles pressure well, so continually and consistently. Accept when you are wrong, so accept your losses and cut them quickly. The key is to cut them quickly, because if you stay in a losing trade, in a losing scalping trade, on the belief that it will change, it will be in my favor, no, then you're mistaken. No. Accept your losses, but cut them short. Quick, decisive decision maker. You need to be one in order to be a scalper. You need to perform well under stress. Okay, and you can assess changing conditions. So if something changes in the market, if the sentiment change, you need to be quickly adaptive. Sorry, the correct word is adaptive. To be able to change quickly based on the new conditions. Now, let's start with the very first scalping strategy. Very, very, very useful for a scalper is the stochastic, but the short-term one. Okay, because stochastic is a technical indicator that compares the current value of the forex pair to its range. Okay, it's very useful because it helps you predict when a trend may turn bullish or bearish. If you ever participate in live analysis, you will see in the short term, 30 minutes chart or even less, that I have always scalping on. But the short term one, the settings, I have detected the settings. So you need to change the settings in order to satisfy a fast environment, such as the 5 minutes chart and etc. So scalping can be accomplished using a stochastic oscillator. Because of the reason why I mentioned earlier, because the stochastic gives you the ability to compare the price of the asset to its recent range, and with this way you can spot turning points. So you can either use um, a stochastic to capture a change in the trend, okay, or you can use stochastic also to time your entry. Okay, because prices in general tend to close near the extremes of the latest, let's say, range. So like in the chart, okay, over here, sorry, ignore the title over here. That's wrong. It's not a 4-hour chart. Okay. So like in this chart, it's a 3 minutes chart basically. I don't know why I didn't update the slide, but over here is a 3 minute time frame. So you can see that the price is moving higher. Let's focus here. Okay, let's focus here, or here on the latest, slightly higher. So it's moving higher. Let's focus on the left hand side, on the right hand side. It's slightly higher. It's moving higher. So, however, the stochastic, okay, start turning lower as well. So this is an indication, and that's not an ideal one because the price is not clearly up. Okay, let's check the actually let's do this. Okay, based on if you're gonna use stochastic as a scalping indicator, and it's such a tight time frame such as a 3 minute chart, what you need to check is first whether the price is moving up or down, and at that point what the stochastic is presenting. If you have seen the price starting moving higher, and at the same time your stochastic is oversold, or at least in the oversold area, okay, so it jumped, okay, it jumped, but it was in the oversold area, and it started moving higher, providing a bullish crossover here. Okay, so I'm not saying that you should take an entry here. No, you will take a long entry as soon as you see your stochastic continuing to the upside. And in that case, you could have a confirmation because it broke the previous high. You see that? So you're relying your entry on the stochastic rather than the price action in this case. Anyway, I have also some moving averages, so you could confirm your entry once it move above the moving average, but in this case, stochastic worked just perfectly fine. Over here, after a sell-off, came down back to where it was like 4 hours ago. Overbought, but still in a downside. It started moving up. It didn't manage. It came down again. And however, in the very next session, we had a really big 3 minutes candle, which actually, what's going on? Which actually, look at that. Let me zoom in. Okay, broken this latest rounding top and this immediate resistance. They close above it, and it also moved above and close above the moving average. So at that big candle, you need to go down and check how your stochastic is moving. It exited the oversold territory and it was already above it, pointing further to the upside. So if that didn't trigger your attention, then here and here could be another possible entry in the long long entry. However, that might be a delay one. Scalping, remember, scalping is taking quick trades. Okay, even if sometimes they end up being break even or even a small loss. So in scalping, as soon as you see your stochastic indicator being oversold and exiting the oversold territory, that requires an entry, okay, a long entry. Let's see some. I'm gonna get back to the moving average in a bit, okay, Barak. Let's check the short entry. It's the same principle. Your price is down, your stochastic is picking, so selling the rallies, as we sometimes hear it. It's the exact contrast scenario. Short position would be used in a downward trending market as per this example. So like the previous one, the long position, it was like it was what we say buying the dip. Here we have selling the rallies. So we are looking for bearish crossovers in the direction of the trend. So it's down, bearish crossover, bearish crossover, bearish crossover, bearish crossover. That was another bearish crossover, another bearish crossover. It might take minutes. I'm not saying that it will take just always will take few seconds. No, it might take time. But as soon as it's profitable and gets profitable, you need to close it. Okay. Moving average, my dear friend. Barak, have in mind that this is for 3 minutes chart. Okay. Be very careful. What I'm presenting is scalping on a 3 minutes charts, guys. Okay. So over here, oh my god, the headlines are wrong over here. Okay, so stick with my text. I have a euro dollar with a 5 and 20 period moving average for the short term, and I have put on also a 200 one for the long term. But you can see how nice the 20 period moving average satisfies as a nice support level the price. Why I have used the 5 minutes chart even though it doesn't satisfy it as well as the 20? Simply because I need to spot the crossovers of 5 above the 20, because a cross above of the low of the short term moving average above the higher one, it's a buying signal. A cross of the 5 in this case below the 20 is either calling for exit level for closing our position if we had been in a long position, or taking a quick short entry, and so on and so forth. Okay, you can combine it with your stochastic. That's okay as well. Okay, let's move on to the next one. Moving average in a 5 minutes chart. Obviously, don't blindly follow what I just present. You need to make sure that it satisfies your chart, okay? Because in 3 minutes chart, let's say for euro yen, the 5 and 20 might not be as good as, let's say, 5 and 9. Okay, just saying. So you need to be adaptive. You need to make sure that whatever moving average you use, it gives you it fits your asset in your time frame. This case we have euro dollar in a 5 minutes chart. So I have used a 5 and a 14. Okay. Buying, entering in a long position when the 7 is sorry, when the 7 closes the 14 from below, taking a short position when the 7 exponential moving average must close the 14 exponential moving average from above. By the way, in these strategies, you can place your stop loss behind the nearest local low, okay, if you are buying a position, or below your latest peak when you are shorting something. Feel free to use trailing stop losses for clocking your profits, or alternative, you can lock your profits um, uh, by uh, sorry, by shifting downwards your stop loss as soon as you see the moving averages keep pointing on the same direction. Third, parabolics are also very good for 5 minutes chart. A change of the position of the dots suggests that a change in trend is underway. That doesn't mean that from the very first dot you should take an entry. Wait until you have another one in order to give you further trust and confidence in your decision. Okay, so you have spotted the change of the dot. Wait to check whether the next one is also on the with the new trend, let's say, and far away from the price action, in order to give you further trust on your trade, further confidence. So here's some examples. Bearish reversal. Sometimes, depending on the asset, you may need to wait for an even third dot to make sure. Okay, be careful. The dot should have a nice distance from the price action. If the dot is close to the price action, like here, okay, like here, like, you see my pen, like here, that is not a call for action yet. But parabolic SAR give a strongest signal if they have a distance from the price action. Distance. The closest they get to the price action, then indicates that something is changing. Fourth, RSI. Very simple. But very simple, but check over here. I have applied to a 3 minutes chart. For pound yen in a 3 minutes chart, the default settings worked perfectly. But if you apply the default settings on RSI in any of your charts, in a 3 minutes chart, and you see that it gives you delay signals, please try to amend them. Maybe you should try 5.3 or 7.5 and etc. and to test it to find appropriate settings to satisfy your asset for 3 minutes. The principle is the same. If RSI rises above the overbought territory, this is calling for a short position. If it falls below 30, so it's oversold, this is calling for a correction, so a long position. Okay, so here it entered overbought condition. So if you sold as soon as you saw this, then look at and you exit the trade as soon as it breached the oversold condition. And you can close your trade here and open a new one, a long one, because it kicked the oversold. Okay, that was a smaller gain on that one, but why not? 1, 2, 3, just fine. Why not, right? Be quick, be adaptive. So that's another RSI example. I will move on to the Bollingers just to slowly because it's already an hour, we're already an hour live. So this is Bollingers 5 minute chart, pound, dollar. Okay, again, here I use the standard one, the default one, because it looked just fine for the pound dollar. This is a 5-minute chart, pound dollar. Remember that the tops of the Bollinger's um, um, uh, um, the tops could be useful for either taking profit or entering a trade, or even just or for stop losses. And also another possible targets could be also the midline, the 20 period moving average, which is the midline. Very useful. But I want you to be very careful with Bollingers. I want you to always remember that the wider the wider, you see, the wider the Bollingers are, that means higher volatility. But the narrower they are, like here, that means lack of volatility. So you shouldn't consider taking an entry in a really narrow Bollingers. You could consider participate an entry in opening a trade if you have wider Bollingers, which means volatility, which means um, um, uh, that we're gonna say trend, let's say. But this in a scalping, Bollingers cannot stand alone. You should combine them with another tool. Okay, they're not useful alone for scalping. It needs to be combined with another uh, um, tool. Last but not least is volume and price action strategy. 1 minute chart. Okay, so this scalping strategy follows the theory that changes in volume are often followed by price action. So in this, so basically, when the volume is low, that indicates a trend is dying, right? Reversing or stalling. Low volume is usually followed by high volume, and therefore short-term price actions as well. So what you need ideally, you need to be patient when you see low volume, okay? And as soon as the volume spikes along with the price, okay, along with the price, so here it started rising, and we have seen the price started rising as well. Volume started rising, price started rising. So as long as you see volume spiking along with the price action, then your aim is to buy before the prices go up. On the flip side, you should then sell once the price are high. What else? There are some traders, by the way, that will be tempted to rely on the volume without full confirmation of a bullish or a bearish trend. That's very risky and not accurate at all. Remember that it can be possible to ascertain a full picture of the volume because Forex is a decentralized market. Okay, and that was pretty much it, guys. I just have some extra ones. The high and low indicator for scalping. That's something that it is again in your MT4, MT5, and how to use them mainly. Basically, you have multiple versions of this indicator. You can see a 4-hour high, if 15 minutes high, a 15 minutes low, and etc. So by checking in a single chart multiple highs and lows in multiple time frames, it gives you immediate and very short, very immediate support and resistance levels, which could also be useful for as entries and exit levels. I'm gonna call it a date. Remember that wagger more than 1% of your account equity on any single trade position. Don't suffer a drawdown or trading losses. Try to keep your losses cut. Try your trading losses not to be greater than 5% of your account equity per day. If you breach your 5%, stop the trading for the day and come the next day with a clear head. Before you buy and sell anything, set your risk and reward ratio, risk management. Divide your potential gains. If your potential gains is in pips is 20, then your stop loss should be at least 10. Risk management. We have presented and given over the course of the years many risk management techniques. Follow them. So I'm gonna call it a day. That's some scalping dangers. Go through them. Spread is one of them. Very high volatile news. Try to avoid them. Do an appropriate technical analysis beforehand. Scalping is all about short, quick entries and exits. So don't reduce the time that you spend per position. Don't trust bots. Okay, many of them are designed to generate losses, so be careful if you're thinking about using a bot. I need to call it a day. Thank you very much for joining me. Loretta, don't worry about it. You're gonna receive your recording, your email. So feel free to go through it. Anything you need, please send me an email at webinars@hfm.com. Thank you very much, guys. Have a great day ahead and take care.